In today's video, with the market close to all-time highs, I'll be getting into all of the major US indexes. I'll be getting into a bunch of great looking trade ideas and some really top companies. I'll be guiding you through all of the key market price levels, and I'll also get into volatility and also my best charts for when to get defensive. If you followed the channel closely this year, we've been covering some of the biggest performers in the market so far in 2026. ARM, Dell, AMD, Nebius, TeraWulf, just to name a few. And hopefully I'll add a few more of those big hitters over the coming months. If you're new to the channel, I'm a verified and transparent Tier 1 professional analyst, former Deloitte hostage, so I'm sure you'll get a ton of value from today's video that you just won't find anywhere else. And as always, I hope the Scottish accent isn't too difficult for you. But let's start off with the S&P 500. It's been a largely frustrating June and July at the index level. Since the market hit its all-time highs on the 1st of June, it's just been one big choppy mess at the index level. If you picked up my video last month, you'll know that the thesis that I've been working with is we're dealing with a very healthy consolidation base pattern within the context of an overall market uptrend. I see no reason at this moment in time to change that thesis. I still feel like the S&P 500 is basing, whilst the frustration is very, very high. It's very important to not lose sight of the actual structure of the market. Lots of questions, I think, over the course of July about the breadth expansion that we've been seeing despite the indexes chopping around. If you have a look at the new 6-month highs list, we can see that throughout the month of July, we've actually expanded from the numbers from June. So more and more stocks are participating in the market uptrend. I know there's a massive focus of technology. I'm in the same boat. I'm very, very focused on technology. But there have been a lot of areas of the market that have been doing just fine. My longer term outlook for the S&P 500 ETF is up around 1,000. But just to show you what I mean by the expansion of breadth, this is the equal weight S&P 500 data for the month of July. And as we can see, there's a lot of green across the board: energy, financials, healthcare, consumer discretionary. It really has only been technology that has been hit the hardest. I think at one point the chart for the triple Qs was down around 11.5%. We've had the Fed interest rates hold during the week. We've had an almighty rally on Thursday. That's continued a little bit into Friday. The market has just slammed shut for the month of July. So for me, going into August, I do have a lot of optimism that we are dealing with tradable market bottoms. When I get into a lot of the individual stock selections for you this month, hopefully that'll become very, very clear for you. It's very, very difficult to have a bearish outlook on the market when the Dow Jones Industrial Average is hitting new closing all-time highs. It's the same message that we're getting from the NYSE composite. Again, big expansion of breadth with stocks, the percent at new all-time highs, advancing again going into August as well. So I'm very, very optimistic. The Russell 3000 is very, very close to all-time highs as well. The Russell 2000 has stalled somewhat, I think, throughout July. Again, very, very reasonable behaviour. I think the micro caps probably signalled that the risky stocks were about to have some kind of meaningful pullback, met upside targets. If you follow the channel closely, again, I highlighted this chart last month that we'd met upside targets in the micro caps. But the one chart that I think I do have a little bit of a headache on is the chart for rates, the 30-year Treasury note yield, also the 10. You could use the 10-year note as well. There's, of course, a very strong correlation with energy. So whilst there is a little bit more conflict in the Middle East, then you can probably start to anticipate energy to move higher. Now, if energy is going to continue to move higher, what does that mean for rates? Again, I think it's reasonable to expect rates to continue to move higher. Now, if you follow the textbooks will tell you that if rates are moving higher, that's not a great environment for risky growth stocks. We'll need to wait and see. I'm not ready to slam the door shut on growth tech by any means. I'm very much looking at growth tech as opportunity. Something that I've relayed to our clients this weekend is that whilst we have rates moving higher, breaking out to new highs, we do also have the Russell 2000, we have the microcaps, etc., close to all-time highs as well. So rates have been going up alongside risky growth stocks. So again, we'll need to wait and see how the market digests this move. I would like to see energy roll over, but as it stands at this moment in time, I'm not really seeing anything unless there's some kind of blindsided news event, peace in the Middle East, etc. But again, I don't really see that anytime soon. But again, just to highlight what I was saying about the 10-year note, very, very close proximity to a breakout as well. But the one thing for me very, very pleasing over the last few days is to see the collapse in volatility again. Whenever we get these spikes above 20, 30, 50, etc., oftentimes you will get that collapse. I think we got the collapse on Thursday, the almighty rip higher. I think, again, if you pay close attention to the markets, you'll know that Leopold blew up this week. So again, I think the market has probably been sniffing something out, and now we are now starting to get to the other side of that. Now, like I said, I am about to get into 20 top trade ideas, but if you followed the channel a while, you know the drill. Please do smash the like button. If you're new to the channel, please do consider subscribing and following on social media. It really does help with the YouTube algorithm and really does help to get my work pushed out a lot more. Now, I will also be covering some of your requests from last month. So if you do have any stocks that you'd like me to cover next month, please do just drop some names in the comments. Let me know why it's on your radar, what's great about the company. I'll keep a monitor of the charts with a view to presenting the chart next month for you. I'm trying to engage with my YouTube community a lot more, so please do pop any chart requests that you have into the comments and I will do my best to pick it out for you next month. But I think where I want to start is with technology and with some of these tradable market bottoms. Now, Nebius has, of course, been a massive, massive performer this year. It's up 117% year to date. Now, of course, big 50% pullback on the recent tech correction. But with that 20% short interest, if this is a tradable market bottom, then this could get spicy very, very quickly. So again, I am very much looking at this as a tradable market bottom. Now, for disclosure, this is a chart that I think a lot of our clients got in on during the week. A couple of folks bought the capitulation, believe it or not. They're a lot braver than I am. But for me, textbook pulled into its 40-week moving average. Some of you might prefer the 200-day moving average. It's very, very similar. And again, if this gets follow through next week, then I could see this starting to move towards 300 in pretty short order. Another one that I wanted to bring into the focus is IREN Limited. Now, surprisingly, IREN is actually down year to date. It's down 8%. The short interest is increasing. It's up to 18%, but it does have reasonable PE ratios relative to its peers. The market cap is only 13.5 billion. Again, one thing I like about charts is they, take a lot of the news headlines out of the game. For me, it's very, very straightforward. IREN has rebounded from very, very logical levels, and the hope is that this range at the moment can again start to get bought up, especially if some of these AI names, the AI infrastructure names, do catch a bit of a bid. SoFi, very, very interesting. If you didn't pick up the SoFi earnings during the week, very, very largely positive. I see that Noto has been buying up the stock again, the CEO, all very, very positive things. The chart in the stock is very, very frustrating. I'm sure there's many of you out there holding SoFi, wonder why it's not going up. I think rates has probably got something to do with it. It's down 40% year to date, which is very, very frustrating. It is a bit of a swing style kind of chart trade at the moment. Of course, long-term believers, and I'm sure you're dollar cost averaging. I think at these levels it's fair game. But if you start to kind of dip below these levels, below 15, you start to get into that 1450. Again, you're going to have to wait and see for another technical tradable bottom. But for me, at this moment in time, I'm viewing this as a solid technical support level, very, very easy out. So if you are someone that likes SoFi, then maybe that chart is appealing to you. Now, I did cover Netflix last month. We've had earnings out the way. The reaction was pretty lackluster. The market doesn't really seem to kind of like what's coming out of Netflix at the moment. It's probably more of a value play at the moment. It's down 23% year to date as well, so it's not been a great place to be parked at the moment. However, again, long-term followers of the channel will know the 50-month moving average for me is a long-term deep technical value level, but that level is only valid for as long as the level holds up. Let me just be very, very clear on that. Price is digging in at these levels, so again, I would like to see buyers step back in over the coming weeks with Netflix. The one thing about technical analysis is it doesn't tell you how quickly something will move higher. It just allows you to assess the risk to reward probabilities. If it was a momentum name that was breaking out of a base, then that's of course a different story. But if you are buying solid support levels, that's exactly what they are, support levels. They're not momentum moves. Again, another name that I think makes a lot of sense is Lam Research. Again, massive performer. It's up 64% year to date. It's, again, reasonable valuations relative to its peers, 51 XPE ratio. Again, it's pulled into its 40-week or 200-day moving average. So again, I think Lam Research might make some sense for those of you. Again, just to highlight, Lam Research was a request from the comments last month. So again, whoever requested it, I think it's a good shout. Again, another chart that I've been covering on the channel for a couple of months is Microsoft. Now, of course, charts are great, but nobody can really predict with accuracy what the earnings reaction is going to be. Thankfully, I think the reaction in this case has been very, very positive. It's ripped higher. Again, I have been covering this chart on the channel for a while as a tradable market bottom. This is the dream, but it has now hit upside target number 1. It has closed near the highs today. So again, that's very, very encouraging news going into next week. So if it can put in a further breakout above these levels from July 2024, I think there's about another 18 to 20% upside back to previous all-time highs. But massive congrats to all you buy the dippers out there. Again, another chart that I've been covering on the channel a while is Dell Technologies. It's up a massive 213% year to date. It is in what I would deem to be what I would call the accumulation zone, where it's just doing a whole lot of nothing. But what I would say is when you start to observe charts that have this frustrating sideways action, these are awesome incredible opportunities for, I guess, more of a swing style trade, especially when you're in this 30% range. It's really just a straightforward buy low, sell high type of chart. So that's where we are with Dell at the moment. I'm sure there's a lot of folks waiting for earnings. I think if it can break out above that 475 level, then we're obviously in price discovery. But as it stands at the moment, it's in this accumulation zone, just waiting for liftoff. Very, very similar chart to Lam Research. Again, picking out another request from the comments last month is Applied Materials. We are seeing a lot of charts do this, where we're getting these big, massive pin candles, thanks in part, I think, to the market reaction on Thursday there. But again, if you are looking at these stocks and these charts, they are great tradable market bottoms. However, what makes them great is not just that buyers are stepping in at very, very obvious levels. It just means that, you know, if the market does decide to sell off, you do have a very, very easy out. You can just place a stop loss below the recent lows, and if the market takes you out, it takes you out. But the hope is that we can get some follow through on this upside late in the week rally. Nutanix, I think Nutanix makes a lot of sense. It's obviously in the software space, which has been beaten up a lot this year. But Nutanix is showing a lot of relative strength compared to a lot of the software names. It's up 14% year to date. There's reasonable valuations, etc. Again, it looks like it's breaking out of, you know, if you're into chart patterns, potentially a cup and handle pattern there. Again, it might be worth considering. Again, TeraWulf might be another name in the AI space, data center space, whatever you want to call it. Buyers are stepping in at the 40-week moving average. Again, looks like a little bit of a pin candle. And if there is follow through next week, I would deem that to be some kind of tradable market low. But these have got massive short interests. So with a lot of the data center names, you do have to bear that in mind. They're obviously mega high risk. You can get blindsided news events, which are very, very frustrating. You know, offerings, which again are another frustration. But as it stands at the moment, potentially there could be some kind of tradable bottom there for TeraWulf. Targa Resources, utilities, gas distribution. Again, having a monster year, it's up 46% year to date. Looks like it's potentially breaking out, making new closing monthly all-time highs. I think there's about 60% further upside. A very, very clear line in the sand. If it breaks below 250, then you might want to consider the position. But as it stands at the moment, it's making new highs. It might be worth adding to your watch lists. Another one would be Credo Technology, back to the kind of AI data center kind of tech space. It's obviously beaten to death since its highs from a month ago. It's obviously had a massive, massive haircut. But again, buyers are kind of stepping in again at this 40-week moving average. And if it can get back to all-time highs, then there's another 50% further upside. Now, we do have AMD reporting earnings next week. Now, I wanted to zoom out on this chart. Again, those of you that follow me closely know that I've been covering the AMD chart for, feels like, a couple of years now. Now, obviously semiconductors have been hit really, really badly. AMD still up 120% year to date. Hopefully you've enjoyed some of that move. If there's a positive earnings reaction on AMD, I think if it can take out these levels at 585, I think, you know, given the Fibonacci levels here, I think $1,000 probably comes into play. Now, when AMD was a market cap down at 250 billion, I made a very bold claim, and I said that AMD will be making it to the $1 trillion club by the end of the year. And I do stand by that. I hope for it to still get there. So I will be watching the earnings there with a lot of interest. And Spotify, again, another one of those frustrating stocks. I'm sure we've all got Spotify. We all enjoy the company and what they provide. but it's frustrating. I think the way that I'm viewing this chart at the moment is it's filling out some kind of tradable market base. So I think if it can take out these levels around 575, 580 in the month of August, then it might be something to consider. There's a very, very low short interest on it. There's a lot of institutional ownership, of course, but I think Spotify might make a lot of sense for many of you. Now, Allstate Corp, again, I'm sure is not many of you are mega familiar with. However, throughout the whole downturn in technology and semiconductors and the AI space, boring old insurance has been continuing to move higher. Now, I did have this chart presented last month for you. So for those of you that do follow the channel, hopefully Allstate has served you well. It's put in a big breakout there. Our upside targets there are up around 325. I'd probably expect some kind of digestion around here, especially if we do get a rotation back into technology. But it's a stock that I think makes a lot of sense. Now, another one that a lot of folks have been requesting is SpaceX. Now, just to be super clear on this, I'm not a big believer in buying IPOs. I think it's really dumb for this exact reason. I know there's a lot of hype behind SpaceX. Everyone's going to be watching for earnings next week, I'm sure. But something I just wanted to bring into focus is something that I think a lot of folks in the technical space look for. I know there's many of you that know fundamental only, I get it. But there's something that's very, very straightforward to look for is what is known in technical world as the IPO base to form. So essentially all we're looking for here is when you get that big momentum, FOMO, and you always get the inevitable collapse. It's very rare that I've seen an IPO just blast off to the sunset and stay there. Generally, you will just kind of get that slow bleed. And essentially what you're looking for here is just for a base to form. You'll start to see the 5-day moving average start to slope up, and then you can get that kind of breakout. But it is down 50% from its IPO highs. So I understand why a lot of folks are looking at it, but until it kind of puts in the IPO base, it's very, very difficult to make the case for SpaceX at the moment, unless, of course, you've got a solid understanding of the fundamentals, etc. But I'm going to be waiting to see what they report for earnings before getting too excited with it. Big breakout this month on Snowflake, just going back into the software space. There's a decent little short interest on it, around 6.5%. I think the frustrating thing, when you look at the fundamentals with Snowflake, is it doesn't have a PE ratio, despite it being $100 billion market cap. But it does have solid earnings growth, etc. But again, if you like breakouts to new highs, upward sloping 50-day moving averages, then maybe Snowflake is worth adding to your watch lists. Now, another one just going into the retail space is Mercado Libre. Now, Latin America retail Amazon stocks might not be your thing, especially if trading close to $2,000. But again, just going back to what I was saying at the start of the video about these deep value technical levels, the 200-week moving average has historically had merit over the last 5 years. And again, I think there's a potential tradable market bottom that's developing there as well. So if it can get a breakout there above 1950, 2000, then I think fair game, back to all-time highs, could be in there. United Health again breaking out. I did cover this chart last month. It's been working pretty well. Broken out of its accumulation zone over the last 12 months. It's obviously been a very frustrating stock to own. But again, there's always, solid fundamentals with stocks like United Health Group. I think, when you get the big declines in stocks like that, generally you should be looking to buy. But obviously, I think the the post-traumatic stress that everybody has from, maybe looking at, stocks like PayPal, for example, which I would, until a few years ago, have put in the same boat. So that's one of the reasons why I do prefer these kind of bases to form. But again, United Health, potentially there's 630 as an upside target. We've got Astera Labs. Again, we have earnings coming up with Astera next week, so probably worth waiting to see what happens there. Now again, long-term followers of the channel will know I've been covering Astera Labs since the exact market bottom in April. Got our clients out pretty much at the exact top. We've obviously had a massive decline from its recent highs, but buyers are stepping back in exactly where they should have, and it's a waiting game to see what the reaction to earnings is now as well. Now Google, again, just going back to what I was saying about those big stocks that offer big declines, when they pull into levels which we can see have had historical merit recently, this is the 50-week moving average. Again, got our clients back into Google last weekend, and thankfully that there's been a big upturn this week. So very, very pleasing to see the targets that we're working with here are back up at all-time highs. We're obviously into silly territory, $4 trillion market cap. But I think what really stands out with Google is the valuation relative to its peers. It's obviously just a 16x, 17x PE ratio, which is crazy. Obviously incredible business, still putting in monster 12 months earnings growth numbers. So again, I'm pretty sure, hopefully, that's a market bottom there. Now, one of the charts that was requested from the comments last month is Oracle. Now, just to explain the chart, I get a lot of requests for Oracle, as a lot of our clients that are looking at Oracle as well. But one thing I always say is I'm not a massive fan of big support levels like this. I do much prefer to kind of see some kind of tradable market bottom. Now, I do put Oracle in a different category to stocks like Google, for example, which are in long-term uptrends. I think with something like Oracle, this has been a long-term nothing burger over the last couple of years. So for me, I would just be looking for this to kind of base over the next month or two, then potentially put in a breakout, and then that would be a valid technical signal in my world. Another chart from last month that was requested is United Airlines. I can see why. It's obviously a bit of an inverse trade to oil markets. So I guess if you've got massive exposure to airlines, you might want to kind of just have one eye on what's going on with oil markets. I think there's a lot of question marks with oil. It could honestly go one way or the other. I don't have any massive conviction either way. It's for that reason I tend to stay away from a lot of the airline stocks, etc. But in terms of the actual chart, I can see why. It's obviously close to all-time highs, pulled into a bit of a support level. But again, what happens here will be dictated by I think what happens in the Middle East. General Motors is very, very close to breaking out to new all-time highs. I think that's a 6-month base that's been developing there for General Motors. It's obviously not a momentum name. It's not a name that's going to set your portfolio on fire, but slow and steady wins the race is just as valid as the 20% momentum movers. And talking about 20% momentum movers, we've got Bloom Energy here. Now, it's obviously one of the Leopold names. I think Bloom up 136% year to date. Obviously, ridiculous performance. It has pulled into its 10-month long-term moving average. So hopefully this is where buyers will step in. Hopefully the market can start to kind of buy up the stock at these levels. There's still a 10.5% short interest, but it does have a big valuation. But I think it's going to have to start justifying it sooner rather than later. Now, if you are still here and you're wondering who it is I am and what it is I do, there's a link in the description for our website at honeystocks.com. If you'd like daily access to a professional tier 1 analyst with a top track record, I'd encourage you to check out all of our transparent, time-stamped work on our website. If you are a trader, an investor, a money manager or a financial advisor, my work is likely a good fit for you. We provide memberships to all of our premium work, which includes our complete market breakdown and trade ideas that go out every single weekend, all of our highest conviction investment ideas. I'll show you what that looks like in just a little second. Our bite-sized midweek halftime report updates and a few more trade ideas. You'll also have access to a wonderful, intelligent community of professionals, investors, and traders from all across the world. You have complete access to all of our chart books, which includes all of our trade ideas, ETFs, and commodities. And if you're new to technical analysis, you also have access to our complete technical analysis program, which will show you how to read the stock market and also build a process that's unique to you so that you can stand on your own 2 feet. Now, to show you what our time-stamped highest conviction ideas look like, here's a few of our very, very recent ideas that have gone out to our clients and members over the last few months. As you can see, the charts are very clear, very, very easy to understand, have very simple instructions on how you can approach our best ideas. But I am very, very unique in what I do. I publish on our website the performance of every single one of our highest conviction best ideas that has gone out to our clients since 2018. So if you are considering accessing our work, please do make sure the types of ideas that I generate are the types of ideas that you like to buy. It's always high quality stocks with very solid fundamentals, and there is a risk to reward proposition as well. I think generally my work is a good fit if you have a mid-term approach, if you're looking, a few weeks to a few months out. I think if you're someone who keeps getting shaken out by market news, making impulsive decisions at market tops, market bottoms, etc. If you keep getting confused by all the different market analyst opinions, if you're maybe too busy with work, life, business, etc. to find the best stocks and the best charts, then maybe my work is a good fit if you do want to be part of a community and you're sick of hunting around social media. So if you have stuck here to the end, as always, thank you very much for watching, and I hope to welcome you soon. Thanks very much.